Hi everyone, today let's start off talking about market optimism. Then we'll talk about all the usual data and charts, as well as my results for the week and my thoughts going into next week. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So starting off with market optimism, this article is showing the number of articles talking about positive themes like a soft landing and how they kind of peak out before we see that recession. And we saw that here in 1999 as well as 2007, and now we are seeing it here once again. You see big spikes, kind of tapers off, and then you get the recession. Similarly here, 2007 spiked up, tapered off, then you get the recession. So we're not quite there yet. We're just now seeing the peaks here towards the end of 2023. Lots of positive articles all the way up into that 1200 range, actually topping out the numbers from 1999. So keep that in mind. We are basically at peak optimism. Everyone still thinks we're going to see a soft landing or no landing and that markets can continue to go up every single day just like they have been. So optimism still good, seems like we're going higher, but understand that once that optimism starts to fade, the sellers are going to come back in, and that's what they're mentioning here. You can see downturns tend to start slowly and gradually, and then they happen all at once, and really we have not seen that gradual phase quite yet. We have noticed it a little bit on the breadth, and I have been mentioning that we might see some kind of pullback based on breadth, and you'll see that later on the charts. But right now, lots of optimism, and it does seem like things are going to go higher, at least until that optimism fades, and it's not happening quite yet. So looking at the Fear and Greed Index, it did finish up at 67 for the week. Let's look at the timeline. You can see we've been hovering between 81 and 65 or so for a while. Dipped all the way down to 57 just for a moment, and then we pushed back into that range. So we haven't seen a really substantial drop the same way that we had seen the previous times. Got into 76, dipped all the way to 25. Last time we got up to 80, pulled all the way back down to 20. And so far we're holding up pretty strong. Markets continue to hang in there. Market momentum continues to be very strong. Strength and breadth have pulled back to greed, which is interesting. And then put call ratio, still in extreme greed. Volatility has kind of leveled out a little bit. We'll take a look at it on the charts. And then looking at safe haven demand, still in extreme greed. And then looking at junk bond demand, you can see extreme fear, which is interesting. That's the first time we've seen extreme fear in junk bond demand in a while. That means that the spread between junk bonds and investment grade bonds is a little bit high. That means people are looking for those safer assets, leaning back towards those investment grade bonds. And that's the first time we're seeing it in a while. Could be one of those early indicators that some investors out there are looking for a little bit more safety. Moving over to sentiment, we got a massive surge here on the bull side. 49%, so we went up 10% in the bull side. People coming out of the neutral zone, people coming out of the bear zone, so everyone ticking towards bullish. Again, that is not a super great indicator when everyone is bullish, but in the short term, certainly seems like everything is going higher, so I understand it. But as a contrarian, it certainly makes me nervous. Moving over to seasonality, we're still in those first 5 trading days, which are typically a little bit bullish for the Russell and the NASDAQ. The SPY is the green line here. You can see it does kind of taper off a little bit, still keeping some of its gains, but looks a little bit weaker than the growth sectors. Right now, everything looks bullish, so this chart is not super helpful, but it is worth noting that the mid-month is supposed to be a little bit more bullish than where we are now, which does seem kind of tough considering that we're already at all-time highs. Moving over to earnings, we have McDonald's, Caterpillar, Vertex here all on the Monday session. Simon Property, always fun to watch. And then moving over to Tuesday, Eli Lilly, they've been on a ripper. They're at all-time highs. They're continuing to push higher. Look at that at a $600 billion valuation. You also have Amgen, Gilead, so a couple of those healthcare names coming in on Tuesday. And then looking at Wednesday, Walt Disney, interesting. Uber, O'Reilly Auto Parts can be interesting at times. And then PayPal, they said they were going to shock the world. That didn't really work out very well for them. And then looking at Thursday, you got AstraZeneca, Philip Morris, Conoco, a couple oil names in there. Hershey, always funny to watch. And then looking at Friday, PepsiCo, that's the big one. Global payments also fairly interesting. That'll wrap out the week. Nothing major for this week. Moving over to the economic calendar, looking at Monday, global services PMI expected to be pretty good at 52.9. ISM non-manufacturing PMI as well as non-manufacturing prices. Got some Fed members talking, Fed Bostic on Monday. 3-year note auction on Tuesday. Got another Fed member speaking. Wednesday we have crude oil, fairly interesting. 10-year note auction. I think that one's going to be quite interesting if it stays around that 4%. I continue to talk about how I think the 10-year note is going to head towards that 4.5 number. It did pop up a little bit on the Friday session. We'll see if that continues. The previous read was just above 4%. And then looking at Thursday, initial jobless claims, just like every Thursday, Fed balance sheet. That sold off a lot this week, which was a little bit surprising. You also have the 30-year auction on Thursday. And then on Friday, basically nothing impactful. Moving over to max pain for the Friday session, look at these massive call walls. 493, just barely below current price. And then you got 515. Obviously, don't expect anything to finish anywhere near that high for next week. But 493 is pretty interesting. That would push us down a couple of dollars if we did end up finishing below that level. We did finish right at the top of the puts, which would put you at 495, not giving you a ton of upside. Gives you a little bearish price action potentially down to that 483 area. And then you would expect some bounces in that zone if we got that far down. So a little bit more bearish on the max pain for this week. But really what I wanted to highlight here is the max pain for 2 weeks from now. This is the third week options expiration. So you have tons and tons of options in the market already over that 3 million mark. Put call ratio quite high, over 2. But you can see, look at these really tall call strikes here at 490. So much lower than current prices, already down 1% from current levels. And then 495 right behind it, also at a very high strike. And then there's really no put walls until you get down into that 475 to 480 range, maybe a little bit here at 485. Even here at 480, the calls are at that same level as well. So to me, this looks quite bearish going into that third week options expiration. And I do think that that is worth talking about as we head into this week and early next week. Moving over to the charts, starting off with the S&Ps on the weekly chart, you can see we were right at this trend line last week. I thought that might have been a turning point. We ended up rallying through it on the strong earnings data that we got this week. Really just Meta, a little bit of Amazon. Everybody else was okay. We did have Netflix, which pulled off a pretty strong move as well. But other than those major stocks, really everything else was either in line or a little bit down. So getting propped up by big tech, continues to go higher. Momentum and RSI, super overbought, super bullish. And I really just added this next trend line here. It's the exact same trend line. I just moved it to the peak from that July peak. So that would give you just a little bit more upside, really just up to that 5,000 mark, which obviously is the big psychological level. Just a couple of points below it at 49.58. The high was 49.75 for the week. So about 25 points off the high to hit that 5,000 mark here on the SPX. Obviously, this is all-time highs, super critical zone. It's not going to last forever. We've had massive runs like this before from March into July. Eventually, we did pull back almost all of that move. So something will happen. The question is when. You just have to be patient. Right now, everything is still bullish. Moving over to the daily chart, you can see we did get another 2 legs up on Thursday and Friday. We marked a new high, so I put in a new level here at 495.73. Momentum ticked back towards bullish, and I wanted to highlight that we do have divergence again. So we had divergence here going back to the peak on 19 December. We broke that divergence here on 10 January, got back above it. Ended up going back to overbought conditions. And then again, we have higher prices, lower RSI read. So we're getting another divergence. So that would be double divergence. We'll see if we can overcome that if we continue this rally super aggressively. It's already been super aggressive. We're already up 20% over the last few months. And the question is, how high can we go? Right now, everything still looks bullish, watching this divergence, and then watching the new level here at 495.73. If that breaks, obviously still price discovery to the upside, looking for that big 500 psychological level. Moving over to the NASDAQ on the monthly chart, you can see we had another bullish candle last month. Momentum continues to tick towards bullish on the monthly view. In terms of resistance, we're still looking at 17,933. We touched that trend line last week, pulled back from it a little bit. Trend line goes a little higher on this month's candle. Let's look at it on the weekly chart. You can see we are right at that level once again. So critical point, we'll see if we can break out from that level. Then your resistance would be up around 18,272. You can see these trend lines are a little bit hard to work with because the NASDAQ rally has been super aggressive. So there's not really great trend lines. We're just working with what I was able to put together here. So puts a level a couple of points higher. That would give you about another 3 to 4% until we hit that major resistance. We'll see what happens. Momentum breaking out of this downtrend. We had divergence here from July. We're now out of that divergence at this peak. So we have much higher prices with higher RSI, or at least even RSI. So breaking out of that, and then looking at the NASDAQ here on the daily chart, it does look a little bit less bullish than the SPY. You can see we are right at these same highs that we had here on 25 January as well as 29 January. We did close above my level here for 28.53. We're down a little bit after hours, which I don't like to see. You can see it here on the hourly chart. We did pull back on the last hour of that Friday session and then a little bit more on the first hour of the after hours. You can see we've fallen just about 25 cents below the level. Momentum selling off a little bit. So might see a little bit of a retrace, but still remember, everything still looks pretty bullish on those daily charts. In terms of levels, again, just 428.55, and then there's nothing above here because it's still price discovery. So no major trends, momentum bullish, just watching for a little bit of divergence, just like the SPY going into next week's session. Looking at the Russell here on the monthly chart, you can see last month was down for the Russell, 3.9%. Pretty interesting there. And then looking at so far this month, basically flat, up a little bit. Let's look at it on the weekly. Still watching these kind of uptrends. We had that obvious dip low in September into October, but so far everything is holding up in terms of a very slight uptrend. Momentum starting to fade. RSI does not look great. We put in a peak. We're holding a higher low, looking to see if we can break higher. Right now, the week was bearish, engulfed almost the entire previous candle. Still holding the level here at 191.89. Touched it this week. And let's look at that on the daily chart. You can see that price action a little bit better. Touched it here on the Thursday session, bounced pretty strong from that level. Fell again on the Friday session a little bit, about 0.5%. Bounced again from that section. So we're in a consolidation for sure. The question is this level going to hold the 55? Trading here at 190.94. Momentum bearish, RSI neutral. We really need that 55 to hold and start to push to higher highs if it's going to happen. Still looks okay. Like I mentioned, 55 needs to hold. Coming off of this rally, consolidation could absolutely rally out of it, but it's in a consolidation and you do have to be patient here on the Russell. Moving over to the Dow on the monthly, everything here continues to look bullish. Last month was bullish. This month continues to look bullish. Let's look at it on the weekly. So far, very strong week, 1.4%. Dow was consolidating for a couple of weeks and then it started to roll higher, breaking out above these levels. Don't have any levels right now. We're in price discovery here on the Dow. Let's look at it on the daily chart. You can see we continue to ride that 9 EMA, touched it here on the Wednesday session, touched it again on Thursday, opened at that same level and then rallied up, continuing to hold and grind higher along that 9 EMA, which is trading right now at 382.15. So everything continues to look bullish. We're holding those after hour gains. Let's go ahead and extend out this trend line, see if we can find anything. It's really a long way from here, so your resistance would be up around that 400 price target. It's about $15 or so of more upward price action. Maybe I'll do a little bit more research on this, see if we can find anything on the daily chart for the Monday video. Right now, everything still looks super bullish and there's really nothing you can work off of. After looking at it for just a second longer, you could see there's about a midpoint. It doesn't really expand very well. If you try to add it to the outsides, it doesn't really give you anything, but you can see there is a bit of a midpoint. We're at it right now. If it overthrows it, you might see a bit of an upswing to that upper level like I was talking about, but right now we're just grinding along that level as we continue to go higher just about every day on the Dow. Moving over to the equal weighted S&Ps, I really have not been talking about this very much because it has been pretty boring. You can see going back to 18 December, we've been in this range really the week prior. 11 December, we got into this range. And so far, we are still in that range about almost 2 months later, still there. So we tested that upper range this week. We'll see if it can break out of it. That is currently up around 158.71. Touched it this week. Next level 160.31. Still pretty well off of those all-time highs at 164.84. Momentum fading. RSI still bullish but kind of neutral here. And then looking at the daily chart, you can see that same price action. Consolidation, one dip low, consolidation, couple of tests. Nothing major happening. Momentum on the daily still neutral. RSI still slightly bullish, not giving any major direction. Again, we're seeing big tech push up the major indices, and the equal weighted S&Ps are just not participating. Moving over to the ratios, looking at the SPY Russell and the NASDAQ SPY, you can see the Russell has been underperforming. We've been talking about it. Continues to be on this upswing, so the SPY is the best performer currently. You can see 2 weeks in a row of bearishness on the NASDAQ SPY. Russell underperforming, so SPY definitely the best of the group. It is worth noting that we did, and I'm sure you noticed that when we were looking at the charts, the NASDAQ is right at its most recent highs. The SPY is making new highs, and the Russell is lagging everything. So continuing to watch that, we'll see how it plays out. So continuing to watch this chart, pushing towards that 259 level on the Russell, underperformance. I do think that the Russell is going to catch up eventually. We're just not seeing it yet. We did see a couple of weeks of pullback to that 55 EMA, and since then we've rallied super aggressively off of the tech earnings. So right now you have to trade what you have, which is SPY and NASDAQ outperformance. And then moving over to the SPY divided by the M2 money supply, you can see we are in this rising wedge. I've been watching this for a while now. We hit that first upper limit going back to July. We're touching it again. We hit it last week. We're touching it again this week. If we break out, that could be interesting. I would expect it to fail eventually and then break back through, maybe back down to this 20 range. That would be interesting. Again, remember 2205 is the critical level. You can see we touched that here on the pre-COVID highs as well as the all-time highs going back to December of 21. Obviously, since then we've overthrown it, but we just have not been able to maintain these levels ever. The only time that we have been above 2205 for any length of time was the dot-com bubble, and we gave back all of those gains for a very long time, pushing this ratio all the way back down to the 14 range, and then obviously 2008 crisis, we got super low down to 8, which would be as low as we were going all the way back to 1987. So certainly right now we are definitely expensive relative to how much currency is out there on the M2 money supply. Doesn't mean that we can't overthrow this, get up to maybe 24, 22. This can extend for a very long time. Like I mentioned, the dot-com bubble did get into this range, and from August of 1997 all the way here until July of 2001, we were well above this level. So it took many years for us to kind of culminate that event. So this could absolutely go higher for a long time. If we were to get to those dot-com bubble levels, that would be up around 3180, which would be obviously a lot higher than we are right now. Lots of multiple expansion during that time. You could argue maybe this is the AI bubble. Certainly interesting, but this is a critical chart and I continue to watch it, and we are at resistance, watching to see if we get a breakout or a breakdown. Moving over to Apple and Tesla. Apple was still down pretty heavily on the week, 3.4%. You can see it hit this trend line on the earnings announcement, bounced from that level on the weekly chart, almost hit 178.50, did tag my 182.37 level and then bounced from there, held the 21 EMA on the weekly chart, tested that trend line as well, so it hit all of those, generated some demand in the stock, and it bounced. You can see momentum on the weekly chart still bearish, RSI still breaking down, volume on that candle also not great, and you can see that big wick to all of those lows on that earnings announcement. Pushed much lower early in the session, recovered most of it, still down about 0.5% on Apple. Definitely range bound, and I would argue slightly bearish. It is below the 200-day moving. It did get below the 200-day moving average, which is always not a great indicator. It held it the last time we tested, and this time it did get below it. So that's quite weak as well, and you're coming off of a lower high. And then looking at Tesla, you can see on the weekly chart, slightly bullish, 2.5% after the abysmal week that it had the previous week. So it's holding in there a little bit. Momentum bearish, RSI bearish. And they just announced that they had to recall a bunch of cars because their hazard lights were too small or something annoying like that. Interesting to see. We're still holding up okay. We didn't hit the trend line all the way down at 167. You would have thought that it might have, but momentum continues to roll bearish. Let's look at it on the daily chart, and you can see it here. We had a low, rallied up a little bit. You have a slightly higher low so far. Momentum gaining a little bit of steam. Been talking about this for a minute, a little bit of consolidation. Looks like Tesla might be looking for a bit of an up leg. Moving over to Microsoft and NVIDIA, both of these have had multiple weeks of bullishness. You can see 4 weeks in a row on both of them, a very strong movement. Microsoft, the largest company in the world, up another 1.8% this week. It did pull back a little bit, got all the way up to 415 and then pulled back, but momentum and RSI still bullish, definitely overbought, but we continue to make higher highs here on RSI as price goes higher. And then then NVIDIA, 8.4%, another massive week. Seems like they roll out these 8% weeks just about every week at this point. 11.4, 8.7, small week 2.5, and then another 8.4 on NVIDIA. Just continues to rocket higher. You try to make some trends. You can see there's this one. Let's go ahead and full screen that so you can get a little bit better perspective. There is one trend line you can argue right in here, marked some tops and bottoms, some support in this key zone. We're there again, so fairly major trend line. If you could argue that there's a trend line within this structure. It's been a massive run here from the lows of 2022. Was all the way down at $110. Now it's at $666. So 600% gainer since those lows. Massive move on NVIDIA. And it does seem like it can go higher every single day forever. Moving over to staples and discretionary, both of these had a pretty strong week. You can see 2.12% on staples, 3.29% on discretionaries. Discretionaries really getting propped up by the Amazon trade, going much higher. Got some short-term resistance there at 178.45. But we're back above the bodies of these candles going back to July, not quite above that wick, which is right in the same area as that short-term resistance. So discretionary showing a little bit of legs. Staples obviously breaking out, took out my 74 level. So next one here, 75.40. You can see we're back into these consolidation levels after falling off really strongly down to 65. So we've almost round tripped that turn at this point. We went from 76 to 65, back up to 74. Seems like we're headed back to 75.40, and then potentially into that 76 to 77 range. See if we can do it. Staples definitely gaining some strength. People moving into safer sectors. Momentum and RSI both look super bullish on that chart. And then discretionaries did get a step back into bullish momentum on that weekly chart. So both of these look pretty good. In terms of structure, I would say staples still looks better, but if discretionaries takes out this level here, then we could be looking for 180 or 185. Let's go ahead and full screen that one. You can see still well off of its highs. Discretionaries topped out up around 215, so we're still well off of that, but it does seem like we could potentially break above where it is currently and then look for these most recent highs up around that 198.40 level. Certainly possible. With that bullish momentum, as long as that continues to build here, RSI breaking back above the SMA looks pretty good as well. Moving over to transports and industrials. Transports continues to lag the Dow. So it did show some bullishness this week, about 0.5%. Right back up to these highs from mid-December and the highs here from mid-July, which is pretty strong considering it did get all the way down to 211 and then we're back up here to 264. So definitely had a pretty decent dip and then a pretty decent rally. Still well off of the highs though. 282 is the high going back to May of 21, and then here in November and December, and then here in November as well as January of 22, and then we started that bigger sell-off getting all the way down to 196.20. And since then you could argue bullish structure with a little bit of a dip. Does seem like it might break out, start to confirm that rally that we're seeing across markets, especially the Dow, and that would be encouraging here going into next week. And then I wanted to highlight industrials. Industrials continue to break out. We had all-time highs. We made another all-time high here with a big breakout this week. 1.9% on industrials, momentum bullish RSI. Headed back towards overbought conditions. So tech is not the only name in the game that is back at all-time highs and headed higher. Industrials are definitely participating as well. Moving over to breadth on the 20 and 50-day averages, you can see we still have divergence between price and breadth. So we had price making all-time highs on the SPY, S&P 500 still going higher seemingly every day, and then you got the breadth here, negative on the week on both charts, a little bit less so on the 20-day average, still holding up pretty decent around that 57 level, but the 50-day average continues to sell off. Another strong bearish candle, 14% to the downside. Momentum continues to roll through that cycle. We're about to get the cross next week. We got almost down to the 200, talked about this area as a potential zone of support around 52.81. Didn't quite get there. I would expect at least one more pin to the downside. And like I said, this momentum chart, typically once it gets into that middle condition, you can see a little bit of a pause there, but it does follow through eventually. You can see even with the pause followed through, even with the pause followed through. So eventually it will follow through. In my opinion, RSI breaking down, this does look weak. It will break to the downside. You just have to be patient. And once we start to see those signs, it's going to be time to head for the exits until we get into a more normalized range. Doesn't necessarily mean that we're going to get all the way down to 10 on this chart, but it is certainly possible. We have been even lower all the way down to the 2s. Once you're in that range, then it's a pretty good indicator that we're probably going to find some bottoms. But right now, we are definitely extended. We got all the way to the top of the chart, and we're pulling back now. Moving over to 200-day breadth. We did not get to the peaks here. We just got to that 76 range, which is still pretty high for 200-day breadth. You can see the all-time highs going back here to April of 21 on breadth, and then we pulled back pretty significantly, getting all the way down to that 11 range. You can see we got even lower here on the COVID lows. So you can get absolutely much lower than current levels, but we're holding up pretty well. So that's interesting. The week was technically bullish, 0.2% to the upside. So it's holding in there. Tested that 69 level again, still holding. Momentum continues to roll over. RSI hanging in there in slightly bullish. Let's look at this on the daily chart. So the Friday, again, still bearish, even with the bullish price action that we saw. So it's hanging in there better than you would expect. You could argue this is kind of a bear flag. So we fell into it, bear flag. And then if this breaks down from that structure, something like that. So we're still chopping in it. If it breaks down from here, that's going to be a big bearish indicator. And you can see momentum also turning bearish, RSI neutral at best. So we're not seeing a full breakdown on the 200-day, but the 20 and the 50-day are definitely rolling over. And then moving over to the 2-year and the 10-year yield, you can see both of these popped pretty strongly on the Friday session based on the jobs data. So yields not selling off quite yet, plus the Fed coming in a little bit more hawkish than people were expecting. They crushed the hopes of a Fed cut in March. And even with that, we did see yields go lower until we got that jobs data. The economy is still quite strong, and I'm still looking for those normalized conditions, looking for the 10-year to head much higher and the 2-year to basically hang out here. Moving over to the put-call ratio. Interesting to see the put-call ratio a little bit elevated. So we've been chopping between about 0.9 and 0.75 for a while. And then you can see on the Thursday session, popped up quite a lot, up to 1.1, and then fell. And then you can see on the Friday session, gap down, rallied back up to that trend line here at 1.05. If this spikes up to 1.04 or even up to 2, that could be interesting. But it's quite odd to see the put-call ratio going higher, meaning more puts are entering the markets as the price goes higher. Typically, it's the opposite of that. We saw a little bit of a dip in December. You saw puts kind of rise up. And you can see that trend here. So October into January, we're seeing the put-call ratio head lower, meaning that more calls are entering the market. And now we're seeing this kind of head the other direction, more puts entering the market as price goes higher. Moving over to bonds, J&K gapped higher and then fell back into the middle of the range, holding right at the 9-week moving average. So we're still in this consolidation. Momentum is fading. RSI looks a little bit weak. So interesting to see that J&K selling off with markets going higher. That's a bit of a bearish indicator. A little bit of foreshadowing coming forward, in my opinion. And then looking at TLT, you can see we did wick that 55-week moving average once again and then rejected from that level. And you can see all of the volume coming through on that. I would suspect that this is an initial test and that it's probably going to head higher. We haven't seen that step on momentum yet. I would have liked to see that. That would have been a little bit more confirmation in my opinion. But at this point, you have to look a little bit more bullish coming off of VWAP. You want to see it get back above the 9 EMA as well. Let's look at this on the daily chart here just for a moment. You can see we did look super bullish for a minute. We had 4 days in a row of really strong price action, and then we gapped down on the Friday session with yields. It's interesting to see how bullish TLT looks with the 10-year yield also looking more bullish. So we're seeing a little bit of confusion. This chart still looks bullish to me. So we rallied higher, gap down, holding that VWAP, holding 21 EMA. Looks like a pullback. If this zone holds, then we could be in good shape. And like I said, the weekly chart does look a little bit more bullish. But you have to keep in mind that the 10-year yield does look a little bit bullish coming off of that jobs data. Moving over to volatility, MOVE index sold off a lot. Pretty interesting as yields were going higher. And then moving over here to the VIX, you can see we continue to hold these upper trend lines. We tested this one here. I did add this trend line from the Friday video. You can see tested these levels, does make sense right at that 21 and 9 EMAs. It's still holding up okay. Definitely holding some type of structure that does look a little bit bullish. We did not make a higher high here, which is interesting. Doesn't mean that we can't hold here at a higher low and then spring back up to that 1650 to 17 level. I still think that that is likely. The question obviously is timing. VIX definitely elevated, and I am watching it pretty closely. Let's see what that looks like on the weekly chart. Not much of anything. Got a doji on the week, 4.45% to the upside, but momentum did tick towards bullish for the first time. RSI still looks bullish. Definitely looks like a consolidation similar to this. We're going sideways for a while, starting to show spurts of bullishness, and then you see a massive spike up. That does seem like what we're seeing here. Moving over to my accounts, you can see I was up pretty decently on the Friday session. It actually took a little bit out of my account from the end of the Friday session to today, so that's kind of interesting. Probably just factoring in some of the selling that's happening here after hours on the Qs. You can see we are at 429 and we're down at 428, so that would be about $400 lower. And obviously the calls don't move after hours. And then looking at my positions, you can see still covered call here on the Russell, continuing to pull in those credits. Seems like the best position is to bring in that theta. I don't know if I'll continue to do this after this position. I might just move into some more TQQQ positions here in my IRA. Not sure exactly. We'll see how that plays out on this cycle. And then looking at the regular triple Qs, I still have a covered call here. I did roll out on the Friday session with that big rally. You can see 7 points on the rally. Again, a little bit nervous that we're selling off after hours, but this does give me still plenty of protection with $26 credit with the strike down around that 410 area. And then puts my max profit up around 436 for the next 2 months. I am still neutral going forward. I think we're in an area of resistance. And I think once all these catalysts are done, we might see a little bit more bearishness. But that's not what we're seeing right now, so you have to trade for the market that you're in. And right now, everything still looks a little bit bullish, despite the massive rallies that we've seen. Let me know down in the comment section what you think of market optimism. Are we still at peak optimism? How much higher do we have to go? Definitely interesting. Let me know down in the comment section. And if you got any value out of this video, make sure you like and subscribe. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.